Now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen. This is Clueless8, and this is the Clueless8 webinar for March 29th, 2015, kicking off around 8:11 p.m. New York, New Jersey time, Eastern Standard Time. A very warm welcome to everyone attending one of our first free webinars that's open to the general public, and I thank everyone for their support. And a pretty nice number of people who are hopefully attending this particular webinar here tonight. Let me start off by a small introduction to a lot of the non-members who are here tonight. The Clueless8 service was born on April 15th, 2014 on Tax Day. And the Clueless8 service will celebrate its first birthday, if you want to put it that way. We're still evolving and hopefully growing some real teeth on April 15th, coming up for this year's tax day. I have been posting, I've been involved with stock twits, as in posting some of my public charts and commentary from since April of 2000 and I believe April 2011 or somewhere around there, and so it's going to be 4 years to that date. Since then, we have generated a significant amount of interest, and hopefully we have helped a significant amount of people by putting out some reasonably precise and accurate forecasting on the markets and charts in individual companies, and all that is archived in stock twits since that time. Tonight, I wanted to give the general public and the people who are listening who are not members of the service a little bit of a brief introduction, and then of course go ahead and respond to questions from the whole member base as well as anyone else who's here tonight. I'll do my best in answering the questions in a concise manner and make some sort of intelligently clueless, what should I say, an answer in an intelligently clueless way, so that we see you know, where we're going with this market and what we're doing. Now, saying all that, just want to explain the features that we have on our service for people who might not know. Number one, the content delivery is done via a private Twitter feed that's at Clueless8RT. That's RT for real time. There's a free Twitter feed that comes through, which is connected through when I put any of my comments on the outside platforms, and that's at Clueless8FR. We have a couple of chat rooms on the website where members discuss their ideas. We go back and forth, and I would say in most cases we make some sense in what we're doing there, and we have some terrific people, a lot smarter than me, who are posting their thoughts, their ideas, and sharing their trades in those chat rooms. And all those are available for any paid member of the Clueless8 service. Number three, we have I deliver some pretty, I would say, insightful commentary, as well as visual charts, and most importantly, video casts every evening, or pretty much as well as pre-market AM reports throughout the week, and that's delivered through the website, our website at clueless8.com. The constant engagement with traders, investors, and members all through the day is a very valuable component of my service. What I consider to be an extremely critical component of the service is the fact that every trade parameter and trades that are put through on a real-time basis is accompanied by a visual chart. I've always said and I always believe that a picture is worth 1,000 words. Well, hopefully a picture is worth $1,000. So the bottom line is that that particular asset of seeing something visually before putting a trade through to make a mental decision by using the visual component instead of just looking at it, buy this or buy that, I personally think is extremely critical in trading these markets. Okay, so that kind of summarizes, what we do. We have we also have introduced, I should say, over the last month or two, some advanced coaching classes, sessions, things of that nature, and we'll also be introducing a few other educational resources that I believe would be extremely helpful and in understanding what's going on, in understanding my work, and hopefully all of you will profit from that. So far, the people who have basically tried it have found it to be very useful. So that kind of summarizes my initial presentation of what the service offers. A little bit about myself. Well, what can I say? I'm a pretty much straight-up guy. I trade for professionally as a living. The service is something that came about, just like I said, within the past year. My own trading book is truly my bread and butter, where I got to feed my family, my pets, pay the bills, pay the cars, the whole works. That's my main focus. Sharing and presenting all this content to my members has been a learning experience for me. I'm in a state of evolution in the sense of how I deliver the content, and it's actually made me, in my opinion, and thanks to all of you, a better trader, because I have to focus my ideas and my thoughts all through the day and in the evening, sitting down and delivering all this, presenting all this content. It keeps me focused, keeps me organized, and I think that's been a really positive experience for me also. So I thank all of you for that. I'm a ex-Wall Street guy who has went through the canyons of Wall Street, lived in the canyons of Wall Street for many years. I am and people who know me know that well. I'm a very passionate student of finance and economics. This particular service is not just about short-term trading or investing. This is about learning and about global finance, macro global economic and political game theory. That's pretty, that's sort of a high-minded way of looking of explaining why what the real wheels of power, how they work, and that for a particular action there are variable outcomes. So it's a probability game. I've always said that when we're in the business of investing or trading, we are trading in probabilities. We're not trading in certainties. That's an old Warren Buffett saying, as we all know, that you pay a very high price for certainty, and we all know that very well. Okay, so the bottom line is that my passion in understanding and looking at the fishbowl from the outside in. I have some extensive global experience on the financial front, and I believe that all those years of experience and my passion in constantly learning is a very powerful asset for all of you. And people who are active members know very well about how I look at things and how I present my ideas. The final thing I'll tell you in my introduction is the fact that this is a game of risk. So anybody who's thinking that this is a cakewalk and they're going to make those big returns, and we've made quite a few, through these volatile markets is basically that's a fool's dream. This is trading and investing, but trading more so, where there's large amounts of money involved. We're not paper traders here. We're real-time money traders. Some are smaller traders, some are larger traders. The reality is that we're dealing with real money. So when we lose real money, or when we win real money, the fact remains that we're dealing with a manic depressive situations. Markets are manic depressive. We get overtly depressed when we get those Monday type of days or Tuesday type of days with the markets just falling apart and it no ends in sight, and then we get euphoric when the Googles and the Netflix of the world are 15, 20 bucks higher. The reality of the situation is controlling emotions, moving through this game of risk is what it's all about. And as you all know, I'm a born optimist. I believe in where we are. I believe that our markets are one of the best markets in the world with the liquidity, the depth of liquidity that we have in trading the markets. And I am a firm believer that through hard work, discipline, taking risk, and courage, and then using all the other risk quantification and the risk minimization measures that one can do, that we can prosper in what we do in this business. It is not easy, but neither is it impossible. And we always have to have an open mind. So that's my 2 cents on the matter. I'm going to open up the floor now to answer any of the questions. Try to keep the questions to a reasonable level. But hey, we got all the time in the world, right? So let's go for it. Thank you for listening. Okay. Are we getting some of these questions coming in now? I'm looking at one of my screens. Okay, bear with me one quick second. Okay, can everyone hear me loud and clear? That's the first thing. Can we get a couple of yeses so I know that hello? All right, great. So I got a lot of yeses in one go, so that's great. A lot of the names, they're all familiar to me. Okay, great. So, first of all, all right. First of all, I'm going to give obviously the first common thing, is where are we and what are the markets doing, right? So first important question: do all of you see one of the charts that I have in the background, and says the Dow Jones Industrial Average, the 4-hour chart going back to the lows of October 15, 2014? Do we see that? Okay, great. So you want to know where the markets are going? Why don't we take a look at that chart? Where do you think the markets are going here? All right. Let me just, let me just draw a couple of lines. I'm standing up, so let me sit on my well-worn leather chair here, and hopefully it won't fall apart, and draw a simple line. Bingo. So if you just look at it, I'm going to try to keep these things real simple today without getting too in-depth. I'm not getting into my internals and all the different, rune indicators and this and that. I will show them, but I'm not going to get, a little bit too much, or else we'll be here till, well past midnight. So the question that I see here is the first question. Are you going to talk about market direction? Yes. What are the best indicators to detect momentum change? Answer is yes. Now, I'm going to go over that. Let me see. Do I text your entry positions? I always post my entry positions. They're all done to the Twitter real-time feed. That's obviously coming from a newer member. Yes, I do. I do not post the prices because I scale in. And my trades are pretty quick, and I mean not quick. I mean I scale in at different levels. So that point of entry where I post the Twitter feed, give or take a couple of minutes. You know, worst case scenario, maybe 5 minutes. I know 5 minutes can be a long time in these type of volatile markets, but yes, they're pretty timely report. So I try to do it as much close to real time as possible. Somebody said, could you explain your colorful charts? I will. And let me just, so there we go. So that's a good question to start with. So take a look at this Dow Jones Industrial Average. One of my key things I've learned over the years, and I'm sure a lot of you are a lot smarter than me, and believe me, I say that with humility. I mean it, okay, is to keep this simple. Sometimes the biggest trades that I've done, which have been huge, okay, I won't even get into it, are the simplest ones where I went with the first line that I drew. And I didn't hesitate. I went in there and I sat there and had the patience to swing it. The biggest trades are actually swing trades. There's no question about it. Now, the volatility in the market, the high number and the intense volatility, the madness that happens these days and will be happening more so going forward, is what throws us off. The biggest enemy that we fight, and I want to get into a philosophical discussion here, okay, the biggest enemy that we fight is our own brain. I fight it every day. I know it. Now, unless somebody really has some sort of software ingrained in their brain, which they're completely robotic, they're not looking at their P&L, and they don't care what's happening with their P&L during the day or during the week. Unless somebody is equipped to do that, as human beings, our biggest failing is our own mental fear, and I'm not kidding around. I've back tested every single one of my trades, and the ones where they have gone up 4,000–5,000% in a bunch of days, and I personally try to fight that fear and basically continue with that trade. But honestly speaking, the only thing that stops us from making that 10–15 grand a day, okay, or more, depending on where you stand, or you know, everyone should have their own quota, whether it's $500, $5,000, or $50,000, okay? The point remains, the only thing that stops us from doing that, believe me, it is a fact, an eternal truth, is your own mental fear. Scared money never wins. Now, we don't all have endless money. So when we get hit on something and we don't want to take the next trade, or we don't want to go into that, we don't want to take this loss and move on forward, well, guess what? We're missing out on opportunities. So that's what holds us back. Let me get back to the market here. Dow Jones Industrial Average. My opinions on what the market is going to do are well stated on my video casts. Okay, this is a this is a quick static chart on that. I believe that this coming week, and this I have no idea what's going to happen on an intra-hour basis. My belief is that at this coming week, we're going to have a short-term bounce. Now that short-term bounce, and look at this carefully, is going to take us somewhere towards the 100-day moving average. I believe we backtest this falling 34. Okay, we fall in 34. So we're looking for roughly about 100 to 150 point bounce before the market probably fails again. Now there's a lot more to it than just looking at this chart. And that requires listening to my video casts, and requires also much more in-depth reading in between this larger picture. So my opinion is that going back to the previous highs is going to take some work. I don't think it's going to happen in the month of March. We're not going to go, I don't think we're going to go up 800 points, I'm sorry, 600 points to 18,300 in 2 days. But I do believe that given the ferocity and the violence of this move down, and look at, I'm going to show you some patterns here, simple patterns, okay? So you don't have to, you know, get too much, too NASA-centric and too much rocket science, simple patterns. I believe that we are going to bounce here towards and test the, we're going to test, and this is the Dow Jones I'm talking about, test the 34, and we're really, best case scenario is that we test this slightly downward sloping 15 moving average. That's around 17,987. Call it 18,000. So a bounce towards 18,000 would be a very bullish measure, and a bounce towards these would be moderately bullish. So let me draw simple thing. You guys can all do this, on your own. So very simple. So here we have here's the trading band that we're following right now. Okay, that's one of the trading bands. The other one, and again, this I've shown repeatedly. It's all over my work, so definitely listen to my video cast. So here's a wide trading band. Now, so if you look at it, if at first glance, we're holding the uptrend line. If we break this, it has to be broken with a big thud, because we came down and we bounced off in a big thud. You see this reversal candle here? That's something to take note of. This is what you call a dead cat bounce, if you want to call it. A dead cat just fell and bounced. Now that bounce doesn't just stop here. I believe that bounce goes up towards this particular zone that I just talked about right here. These moving averages. Moving averages are not just lovely colors that I put here on the lines. These are moving averages of prices going back to whatever moving average we're looking at. 100-day, 50-day, 34-day. So I believe we're going to somehow enter this zone on this bounce. Whether we go past it, and whether this past week's dramatic fall, violent fall, is warranted, will remain to be seen. Keep in mind that I am a messenger of the markets. I do not control the markets. So my opinion, and everyone should have their opinion, or else they shouldn't be trading, is that that you must have a conviction, and that's when you trade. If you trade without conviction, whether it be a bullish one or a bearish one, you're lost. You know what Dick Tracy said, a man without a plan is no man. Well, the woman without a plan is no woman either. So the bottom line is that this is one man's opinion on what I see happening on a very short-term basis. I still believe that we're going to fall into this zone. And I believe that's going to happen probably sometime close to tax day. Dropping 700 points is a big deal. That's roughly about 100 S&P points. So that's not going to happen like right away, but you never know. This happened from here, so why can't it reverse down here, going back to 17,000? So my thesis goes that that in order for us to break in and test the lower end of the band, it's probably going to happen in April, maybe the latter part of April, or maybe it's going to be the old-fashioned sell in May and go away. But we are going to come and test these levels purely by looking at pattern symmetry. And it's going to feel like Armageddon, but then at the same time, hopefully we are in the right side of the trade, and we have hedges in place. If we do have long positions, hedges in place like I did last week, and that we make those tremendous 300, 400, 500, and in this type of case, you make a lot more if you stay short. Now, this doesn't happen in one day, so it's never that easy. So that's my opinion on the short-term movements on the market that we see. Okay, let me move on to this question. Could you explain your colorful charts? I just did. Can you please explain how to read the stop set points from your charts? Yes, I certainly can. So let me just pull up something that's already created, right? So let me try to pull that up, and I'll explain. Well, let's take a look at this, for example, all right? This is a good looking chart of the SPY. This was the closing at around, I believe, it was at 3:51. All right, 9 minutes before the close on Friday. And believe me, all of us want to get the hell out of Dodge. We didn't want to trade anymore. I just wanted the weekend to start. So, and it was a lovely weekend, by the way, out here in the Northeast. For all of you in the Northeast, it was nice, including today, which was beautiful. So, saying all that, if you look at this chart here, this is one of my charts. This is the uptrend line. this green, look at the marker on that. That's the acceleration band. I used acceleration and the Bollinger Bands. This is acceleration band, simple way of looking at it. We bounced off the lower acceleration band, very constructive. This is the uptrend line. We have a hollow doji here. These are hollow candles. People who know my work, people who have profited from my work, they know that I'm a firm believer of these hollow candle reversals, especially from ugly bottoms. From my definition of a hollow candle, aside from the real technical definition, this is where the smart shorts cover. And the short squeeze begins because the late shorts who came in here or maybe came in here, they're basically getting singed. Okay, they're getting burned. So you get a massive reversal, hammer reversal, and then you get this hollow candle. Don't ask me why it's hollow. All I know that if you buy around here, you make a lot of money. When this happened back on October 15, 2014, and then October 17 and move forward, we were in the game. I will be the first one to tell you and never lie. I didn't buy it here, and I did buy here and hold it all the way here because I had no frigging clue that it was going to get up to that level. But you can trade up these moves in staggered moves and still make a lot of money. Okay, and there's many ways to read this chart, and I'm going to leave that for another day. All right, and people who do want to really get in depth into constructing charts and such, I would recommend them to basically sign up and take those advanced coaching things, because I have worked with some people on that, and they'll attest to the fact how well I've described each of these moves in minute detail. Not possible to do that in a public seminar, but you can simply look at the fact we went over the 34, the 50, took off, and believe me, this move itself surprised the heck out of me. So so right now what we have is higher lows. Okay, so you might call it an ascending triangle. You might call it a head and shoulder. If you're bearish, maybe a bearish view. Here's the head. Here's the left shoulder. Here's the left shoulder. Where's the right shoulder? Not there yet, but maybe there's a right shoulder forming here. Then we just fall, and we fall all the way down here. That could very well happen. So the bottom line is that there's something called cognitive bias. I've talked about this, all right? Keep it real simple here. Our actions in life are heavily influenced by our experiences and our experiences on maybe dealing with a similar issue in the past. We call it baggage. So if you're baggage, you're going to look at things here and say, hey, hold on a minute here. There's nothing wrong looking at this chart in a bearish fashion. I do it too. So this looks like a confirmed head here, a confirmed head. Left shoulder, right shoulder forming, and then we can fall. Now, because that's a cognitive bias. That's somebody who's looking at it purely from a bearish standpoint. However, given what we saw before, we seem to have held the lower end of these acceleration bands and bounced. So from this point, this is a positive thing. Okay, this doji, hollow doji, if you want to look at it that way. And again, mind you, I do warn you, I am not a pure technician. I've always said that traditional TA or technical analysis is legacy business. Okay, it doesn't really fully work in this environment we live in, because chart patterns are changing literally by the second because of the heavy involvement and the speed and the viciousness of algorithmic high frequency trading. Fantastic article on the website that you might want to look at, on how high frequency trading and algorithms are killing retail traders. They're not just killing retail traders, they're killing hedge funds. The largest number of hedge funds stopped trading and went out of business, or just said, that's it, we can't do this anymore, just over the last 12 months. So even the pros can handle this, and they have the best minds in the world working for them, the best technology working for them. So whatever I'm doing, I'm still surviving in this business, and I'm still overall, net, doing rather well. So there you go. Am I ever going to start a hedge fund? Never, because I don't want anybody else's headaches to be mine. I've been there before, and it's not going to happen. So saying all that, this is positive. This is positive. Look at it simple, okay? And hopefully we enter, and I'm just trying to see here what we're doing on the futures. The futures are down about 3 points. So we'll see. It's too early to tell this evening. So if we enter here, I believe that we're going to come up, at least test the 50, and then probably climb up. So I think over the short term, over the next couple of days, at least this level holds. If it fails, we're certainly looking at lower numbers. No question about it. All right. So that kind of, Can you please explain how to read the stop set points from your charts? Let me pull up another chart here. All right. So here's a chart of American Airlines. Been trading the stock all the way from not the 20s, more so from the 40s. And it's been fantastic, this overall trade. A lot of you will attest to that. This is not a fast-moving, vicious Netflix type of trade, but I've called the shots on American Airlines pretty damn well, given the background of oil prices and all that. So here, let me walk you through this. This is a ascending, this is certainly an ascending triangle. You can see here, this is a double bottom. I normally, the support level is here. I don't have that drawn here, but anyway, just look at this. This, when I draw this, I would call it amber line or yellow. It simply means that's the intermediate level. This generally, and I'm going to pull up another chart to show everyone, is green. That means that's what I expect the optimal target to be. Uptrend lines are drawn in, you know, it's uptrend line. I mean, it's not that difficult to figure out. I normally put, if I see a defined pattern, I put it there. And that's this is a pure ascending triangle. I can see that. This is a beautiful chart. It looks like this one's going to break up and probably head towards $60, and that's American Airlines. Let me try to pull up. Let me see one where. Okay, so let's look at Baidu. All right, took a position on Baidu on Friday. So this is another one. All these lines, these wavy lines, very simple. They're Bollingers or acceleration bands. Simple. Red, support. Not too much to talk about. Hollow boxes like that are gaps to fill. Gaps to fill. Again, I don't know why I don't have the green line, because I don't expect this is the top end. I should have drawn the green band. You'll see it in many of my other charts. But so that's the easiest way to read it. An arrow, what can I say? It's heading, you know, I think it's heading north. Anything below that, it's support. So you better watch out, because it looks like it, you know, it might go lower. The red is the deep support, and these are the intermediate supports that we see. Looking at the MACD, I highlighted that window because this is very positive. The stock was coming down, came down from the 209 level to 203. However, if you look at the internals, the histogram is going positive. That's known as a positive divergence. You want to know what all these lines mean? Just look on the left-hand side. On balance volume, MACD histogram, MACD 1226, RSI, you name it. Okay. Somebody asked why use the 34-day moving average. Because it works for me. I think it's a very reliable indicator. I use the yellow that I use very fast. That's a 5-day moving average. I still use it in many of my other charts. The 922, I can use 9, 13, 22. All those are good. Again, stick to the KISS principle. Keep it simple, stupid. The lesser number of indicators you use, honestly speaking, you get a clearer picture, a cleaner picture. So the indicators, I'm not a robotic technician where I'm trading off every single indicator. I'm looking at pattern symmetry. I'm looking at internals. I'm looking at the background of macro global dynamics that's happening behind the markets, and I'm looking at all the stuff that's going on, gap fills, Bollingers, and all that. So the 34 works for me. That's why I use it. All right. Let me see here. Let me pull up another chart. Let's pull up a crazy one of Netflix, right? Well, I drew this, and again, some of my charts are. This looks like this looks like modern art. It should be on MoMA, Museum of Modern Art in New York. I drew this because instead of drawing a box on the gap, I drew a oval. It looked nice, right? So I left it out there. I called it the abyss. I'm trying to get a degree in humor, so I kind of put some stupid stuff out there. Like my 16-year-old says, "Dad, stop with your stupid jokes." Well, what can I say? You know, I'm a trader. We're you know, we have to have a sense of humor. So here, the abyss simply means that this is a gap here. The gap fill here's the major support. I believe that it might move higher. Let's see, or it falls into the gap. It might go to about 400 before it makes the move. We have yet to see. These are downtrend lines. Very simple. Let's look at this here. Price line. Another, not that. This. Now this is a very. Can everyone see the price line on the back? Can everyone see my charts? Okay, great. All right, cool. So there's a lot of stuff going on here, okay? And I could spend, and I spent actually a good an hour with somebody over the weekend as I was doing these coaching sessions, explaining the nuances of this chart and much more. And every time we talk about Priceline, and my good friend and fellow Clueless member Tango Foxtrot would attest to that the last time we identified Priceline in the previous seminar, stock was around 990 or whatever. We looked at it and we talked about it. I said, this is it. This is a great thing. The stock was up 300 frigging points from that level. And I think Tango will say yes to that. Now, did I hold up for 300 points? Absolutely not. Did I make some serious coin on the move up, on the following moves? And I'll drag up that chart and remind everyone one of these days. I absolutely did. Those are the trades that the $8 calls or the $4 calls go to $60 or the $80. It takes guts, takes patience, and it takes, what can I say? I don't know. I don't know what it takes, but it definitely takes patience and discipline, and sometimes I use the term patience grasshopper, right? So this is one of them. So I don't know. We're talking about Priceline again. So this chart's saying a lot of things here, and I try to explain as much as I can, okay, without inundating members with TMI, too much information. This is the dragon bullish formation. You want to know what a dragon bullish formation is? It's this, all right? So look at this carefully, and let me try to see so look at this, and this is it. So it's basically a very similar pattern. Now, does that mean it's going to work? I don't know. I'm a trader, and I'll see what happens. But at this point, Priceline's filled a major gap. I called it a gap fill. Here is what I consider to be some real technical support, which is the lower arm of the bullish falling wedge, okay? And this is a macro wedge. But closing the gap itself is a major thing. So anything below, it closed the gap on Friday, bounced off a little bit. It also happens to be the confluence of the 50. Retested the 50 moving average. Now notice one thing, simple thing here. This is the way I look at things. You got a massive drop, well, not that massive for Priceline, from about 1197 all the way down to 1130. Okay, so roughly about 70 points. What happened to these moving averages? Nothing. The moving averages are still creeping up. The crossover is intact. The 34 is moving up. The 50 is moving up. All it did was basically test the gap and the 50 moving average. And if you look at where it was here when it shot up, from the last webinar from February all the way up here, well, guess what happened? The standard deviation, and I've talked about this in my video cast, from the 30 and the 54. In other words, how far it's moved away from the glide path. You can't move away too much from the glide paths, right? You can't keep on going altitude and go to 50,000 feet. You got to come down and go on the glide path. So this is the glide path, if you want to look at it that way. So it moved way too much. It reverted to the mean. That's fine. It moved way too much away from the glide path here. It reverted to the mean, shot up, overshot. That's what I call manic depressive. Manic, okay, manic moves here, which is euphoria, and depressive, too depressed. So every time it's the same old story. If you move away too much from the moving averages, you're going to revert to the mean. So it reverted to the mean. It fell into a couple of patterns, gap fills, and testing the moving averages. Let's see what happens. If this trade works, we're going to get roughly about 60 points on it, and it's got to break away from this fast, and we'll see what happens. If it falls below the support here, we are most probably going to come down and test this downtrend line, and that's around 1062. So that's what? That's 30. That's another 90, 100 points. Can it happen? Sure can happen. But for this to happen that fast, I don't know. I'm not going to make any judgments on this. We'll have to wait and see. But on a short-term basis, I believe that we can come and touch the top of this falling wedge, this downtrend line, if you want to call it, and that itself is about 30 points. If you're a trader, take the 30 points. The calls are going to be up about 300%. End of story. All right. Let me see here. Let's take a look at another huge. This stock is a monster. Now this one was from. And I'll show you the follow-up on this one. This one's a huge winner. Okay, so look at the ICPT, right? Well, why, people say, oh, why, it's way up there. Well, that's a standard retail answer. It's way up there. Who said this? And it made a lot of sense to me. It's not where stock comes from. It's where it's going. Because where it came from is past history, so it doesn't mean it's going to go back there. Maybe things have changed materially and fundamentally positive towards, where it should be. Maybe a lot of people are really excited about it. Maybe there's a euphoria bubble. We'll ride the bubble on this one. So you're talking about, and again, mind you, this is a highly volatile stock, great company, Intercept Pharmaceuticals. It's a stock just within the last couple of months I started trading. I missed this type of move on that, and made a ton of money doing this. I came into the picture around these levels. What is it, 170, around this level, right? And so far, it's been a fantastic ride. So here, I feel that this stock will at least get towards and touch this place. So here's major support. It's obviously a swing chart. And that's 283 points lower. None of us are going to be around to see that type of stuff, as in holding it. But this is a clean chart. If it, on a short-term basis, I think the stock can get up to this, this 320, 340 level, and it normally vacillates around here. Massive reversal candle, which was great. It continued on Friday, so we'll see what happens. So this one, for example, if it enters this zone, this band, this I should have actually done in green. It's going to move into a different trading range. And if you look at pattern symmetry, then the pattern symmetry basically completes itself up around the 500 level. Now, if it gets up here, it could very well do this right shoulder move where it can come down and test the 200 again. So look what happened here. So this is the left shoulder. It's possible that it creates a right shoulder. But before that, I'm looking at it also very reasonably short term and fast. It probably gets up towards here before it fails. So that's another picture. All right. Questions? Anyone there? Okay, what are the best indicators to detect momentum change? Did I miss that question? Looks like there might be a bull run coming. Okay, so let me see here. No problem, Jeremy. Do you participate in the chat room, or are you a member? Thoughts on Twitter and Baba? Okay. All right, just trying to pull up a chart on Twitter so we can see. Actually, let me do this. Long-term fan, and I like that. Okay, good. All right, so let's take a look at Twitter. Let's do this here. I'm using free stock charts here. I think visually it's a great charting platform. Thinkorswim is still my best. So where is my Twitter chart? So here's the Twitter chart. This is a beautifully clean chart here. I mean, honestly, here's a large cup. Developed a handle, and now he's trying to break above this line. We need to see a convincing breakout. Okay, and I think it's going to happen. It's got the momentum. The internals seem to be fine. I've started using the vortex indicator. 1 second. The VI. 1 second. Okay, and everything is kind of lining up. and I actually used to use that a bit, and then I heard Kramer one day talking about it. I said, yeah, why not put that in? It's simple. It's also like the directional indicator, the DIs. So here we have directional indicator moving up. You got this. You got the red needs to stay down actually, so we don't want it to move up parallel. But so far it's good. This is interesting here. The OBV, on balance volume, is on it's a runaway train here. So we are basically seeing, and if you want to see the real definition of on balance volume, please go to Investopedia, take a look at it. I simply describe it as net volume, buying minus selling, so more buyers than sellers. So runaway train here, you can see that. So internals are all good, volume's good. What's the chart telling us? I don't see anything negative on this chart. I would see something negative on this chart if we start to see it break, fall, break the uptrend line here that I had drawn. And I would say any break below 46 or so, it's not good, even though it could be a head fake. Algos and HFTs are constantly head faking us, all right? So the bottom line is, and false moves, I mean. So we could come down and test the bottom of this Bollinger, which also coincides with the retest of the downtrend line. Keep in mind, this is the Bollinger Band. Why do I have it twice? I have no idea. So let me remove one. And let me add in, I don't know why it's not there. Let me put the 34. And let me put the 50. Okay. The standard deviation, or from the 34 and the 50, it's not outrageous, even though it's kind of climbing with the 34. That's a big plus. This yellow line here is the 5-day moving average, good for short-term traders. That's moving up. So we could come down and even test the 34 at 48. Doesn't change anything. What does change the picture is if we break below the 50. This is the daily chart. So it fought hard. With the crossover actually happened here. Okay, all the way down at 38. You can see that. We moved quite a bit away, as in standard deviation. I talked about before. Away from the 34 and the 50. Right there. But look what we did. We came back and we reversed to the mean. We held the Bollingers. We held the green line, which is the acceleration band. But more importantly, we basically took away some of the froth by reverting to the mean. Right there. And then we bounce. So this is a large cup handle. And, look, I'm not... despite my bullishness, I want to mention this to everyone, and especially a lot of the newer people who are listening to it. I have a reasonably good size trading book. But despite all my bullishness and, okay, this is a bull market and this and that, I've also called some major tops in the market short term. I still believe the corrective pullbacks, because of the ferocity and the violence of the algos and the HFTs, can be 6, 8, 10, 12, even 20%, and it happens quicker. I said something last week. I said the faster we fall on this massive drop, which was a mini black swan on Tuesday. Was it Tuesday? No, on Wednesday, right? When we fell apart. I'm losing track here. So the thing was on Wednesday we fell apart, and Wednesday is supposed to be a red day. Was ugly. So the faster the ugliness, the better off it is in resetting the internals. And that's good, because short term you get that bounce and then you play it. I mean, this is like driving driving a Lambo on the Italian Alps, right? You don't keep your hands on the wheel. You're not watching what's in front of you. You're going to be over the cliff. You're going to land in Albania or somewhere. Well, visualize that. Okay, that's kind of a, that's a price line joke. I'm just kidding. So the bottom line is, you got to be. It's a very volatile market, but again, every action has equal and opposite reaction. So the violence of what we saw last week, as in the sharp drop, very sharp, 2-4% type of drops, and in some cases a 10% correction on the biotech index. All that is good for the short term. It washed out a lot of fraud, put a lot of fear in. Everyone got frozen. All that good stuff. So we're due for a quick bounce, and that bounce could very well be equally violent on the upside. And then it's rinse, repeat. The same old story. So that's what I'm saying. So what I was originally saying, deviated away, is even in my most bullish circumstance, and I'm certainly not very bullish at this point, I still think the market's in choppy waters, is the fact that I will not deploy more than 40% of my trading capital in the market. So there's always cash on the side. So even if you're playing with smaller amounts of money, always have some cash on the side, because even on the worst days, okay, when markets are ugly, you can still make money. You know, the trades on GoPro, huge, you know, on a percentage basis, on the weekly calls, on Twitter, on Alibaba, which I'll show the chart in a second. Those were doing fantastic on a very ugly day in the market. So we did very well with that. So you got to be a trader. You got to take the profits off the table, and you got to, you know, manage your losses. It's all very easy for me to say, but I do this all day long, so I know the pain and the suffering and the joy. So the reality of the thing is there's no steadfast rule that 1 + 1 = 2. So you got to manage your trades as much as you can. But you always have to have cash on the side so you can jump on the fast-moving movers that's happening on that particular day or the morning, which I always highlight as much as I can, and make up a significant amount of your loss. And not only that, make some very large profits. So net, you remain in the green. So that's it. And that's the simplest way I can describe what the broader picture of trade management will be. It can be in this type of market. So Twitter chart is bullish. I'm looking for about 55 or so, and another 5-point move from here would be nice. I believe this pattern gets completed. So it's a very good looking chart, to be honest with you. And once it breaks over 55, all hell breaks loose, because then there's this big gap up here. Okay, you guys can draw this too, right here. And that gap is in the 60 to 66 range. Now, can Twitter get there? Well, you know what? They're doing a lot of stuff, so let's see what happens. This is the actual gap, actually, all right? So we need to, you know, I believe that if we get to this level here that enters the gap, there needs to be a little consolidation, and that brings us down into the low 50s, and then a move up would complete this cycle. But Twitter's definitely on the move. All right, thoughts on Twitter and BABA. Okay, let's take a look at BABA. So this is one Theravada. This is on Thinkorswim, so that's why the chart the thing looks different. It's simple. This looks like more of an algo chart, right? So let's keep this simple here. Baba's got some juice here where we are. I can't. Let me see. I can't remember exactly where we closed that. Let me see on my other screen. Where did we close that? We closed at 84.58. So we pretty much closed here, right? So I'm expecting the first move towards 87. That's a decent return on the weekly calls. I mean, and by the way, don't buy too much time premium, or pay too much premium for buying extra time, or time premium, if you want to look at it that way, on your calls, because honestly speaking, we don't know what's going to happen as we get close to April 15. I know there's going to be one heck of a sell-off right before tax day or something like that, or maybe the sell-off was last week, you know, where they freed up some cash to pay the taxes. I mean, you know, they said it was all primarily ETF selling. Now, ETF generally sell because, you know, a lot of their retail investors said, hey, you know, I got to sell some of my ETFs, which have done so well on those across the market, and specifically in the tech sector or so, to free up some cash to pay Uncle Sam. Maybe that was the reason. Maybe that April 15th sell-off is over. I don't know. But the fact is, I keep on rolling my weeklies because at least I have a little bit more control over the events. You know, we don't forget that weekly options were put in place by the CBOE, Chicago Board of Options Exchange, and primarily for event-driven situations. Well, let's put it this way. Every frigging day in the market is an event these days, right? So if it's event-driven, you don't want to go out too far. That's just one man's opinion. So saying all that, can everyone hear me? Okay, great. Fantastic. So at this point, 87. You know, I'm looking at 87, and if we break below this, you know, I would say below here, which would be around the 83 level, not 83.60, more so here. This low, this was a nice reversal low. So you could look at the candles. This would be about 83. Then I start getting really worried, and this is, you know. So far, it's looking good. It's looking good. It's starting to get overbought, but this is a 1 hour chart. So that's my take on BABA. BABA really needs to push forward, and I'm looking at 87 on that front. All right. Thoughts into it a long time. I know. Do you think local fills the ER gap before moving higher? Okay, that's another chicken lover here. So let's see here. Loco. Let's pull up. I have a couple of stocks here. Do I have Loco here? My opinion is Loco is an investment. I think the company knows what they're doing. I think they are going to be a hugely successful company. It is not a trading stock. Um, it is not a trading stock. And let me just fill in one of this. That's another company I like. Okay, 1 second. Let me take ICPT out and put in Loco. Hopefully it'll populate the thing. So when you look at this chart, basically Loco has to stay in this box. If it breaks below, let's say 24.45 or below 23.50, or I would say 24.40, that means somebody just doesn't want this stock. And personally speaking, this channel needs to break higher. Simple. You know, this gap here up at 36, I believe, does get filled. That was a rapid deceleration down. I'm not sure if there was some sort of nuclear fallout on the chicken range or something, but the bottom line is that this I started looking. I played Loco during the initial IPO. Look what happened. Huge enthusiasm. Now the earnings kind of changed the picture. They seem to be doing the right thing. So again, without getting too explanatory, we really need this stock to break above 28.49, hits the 30.31. You get generate a lot of movement at that level. Technically, at that point, this gap is possible. So my personal opinion is it's an investment. I think it works well. I believe that this consolidation better not break through below this box here. This gap gets filled at around 24.46. Personally, I don't want this gap to be filled. But again, if it's a long-term investment, I don't care about these patterns. I'd buy this stock even if it's coming lower. So that's my opinion on Loco. And I think they have they have a bright future in front of them. Okay. I did not answer the momentum indicator question. Okay, when you look at the momentum indicators, okay, I explained to you. You can look at the MACDs. You can look at the. One second. You can look at the Arun indicator, which I started using. So, if you look at the Arun on Twitter, for example, let me just do this. So you can look at this. This is the daily. Let's look at it weekly. So this is the momentum indicator. You start to see the Arun up, like crossing over the down. It's great. So that's one momentum indicator you can see. The MACD histograms. You can look at the vortex. You can look at the MACD histograms as momentum indicators. You can see how the MACD is rising. On balance volume is a momentum indicator as to how fast something is moving and whether money is flowing in there. So again, all these can be on aggregate looked on as momentum indicators. There's no one specific one which tells you what it's going to do. It's just the way it is. So that's the answer to your question about momentum indicators on that. Okay, let's see. Tesla looks bad. Okay, Tesla's getting a lot of negative publicity. The stock failed, and at this point, let's look at Tesla. So let's look at Tesla here from a daily basis. Keep it simple, right? So on a daily on Tesla, these are some major supports we're dealing with. Let me put all this down here. Let's look at the internals first. OBV, on balance volume, no good. All right, see how it's pointing down? So that's the first sign that the stock, there's money coming out of the stock. So this is a daily chart. So on balance volume, just going south. So not good. MACD starting to curl down. RSI starting to curl down, even though it's, the relative strength index. Let's take a look at the Arun. The Arun doesn't look good. I'm sorry, that's the vortex. Let's take a look at the Arun, the red line, you know, straight up, not good. So overall, Tesla's on a pullback pattern here, and it certainly looks like, if you look at a pattern, it certainly looks like it's a large head, left shoulder, right shoulder. You can trade it. Certain days it could be, you know, up 4 points. It's a different thing. But if you're looking at it from an investment thing, Tesla, I would say that if you put, at this point, you would put the, you go ahead and put the Fibonacci retracements. 50 Fibonacci on Tesla brings it down to about 167, 168, and I think it is heading for the 50 Fib retrace. There are supports here on the Bollinger and all that. It is quite oversold. So again, trying to short it at this point, if I zoom in, it's, look at that. That's the hammer reversal of the acceleration band. You got to watch these things. It moved up $4 from there, so it can easily move up and kiss this at 194. This falling from a trader's perspective, I'm telling you. Can everyone hear me about Tesla? Yeah, Tesla. In answer to somebody's asking, if Tesla moves the chart says same thing. Rune. Tesla trading with oil futures. Yeah, Tesla trades with oil, but that doesn't really mean much. If you know, if they show that they sold 5 more cars in China, more than they thought, the stock could be up $10. Keep in mind, it's a heavily shorted stock. Fund managers still like it. It's a well-loved company. It's an American icon. It's a cult status. So, you've got to take all those intangibles into consideration before you go do that. You know, when it came down and it looks like crashing down, look what happened. There was a huge hollow candle reversal. So at this point, we are at we're back down here. Is it somewhat of a, is it a mystery that it basically held that hollow candle reversal here from January 14th? No. So at this point, if they move up and they take out, let's say 192, 193. Then on a daily basis, that becomes a hollow candle. You know, look at here, it was falling apart. Then you have a hollow candle reversal, and the stock basically goes up from 194 all the way up to 218. A lot of shorts got burned. Even on this move down, it wasn't a one-way down, it's back and forth. But technically, as I showed you, the stock just looked like it wants to go towards the 160 level. Is it going to happen right away? I have no idea. So, on a short-term basis, you could play the bounces. You could move this and play it up to about 195, 10 points, a 10-point mover. And then, of course, if it fails here dramatically, keep in mind it's quite oversold here. And looking at this, let me get this bigger. It's never a one-way train with Tesla. You got to keep in mind. Looking at this thing here, the histograms, and this is advanced chart reading, are not in the deep red like they were here or they were here. Histogram bars I'm talking about, they're actually almost positive. So there's some underlying accumulation going on despite the falling, despite money rushing out of it. This could be retail money for all I know. Everybody getting, you know, and some funds dropping the stock. So again, it's not that easy to say, hey, I'll short it. I'd love to short Tesla and make 30 points. It doesn't work like that. Even though some traders in the room did extremely well. I mean, I shorted Tesla as the lottos and got about, what did I get? I got about 50 or 60%, and they were up like 200% by the end of the day. And I wish I'd held it. They were lottos. They were 44 cents. Okay? And I think they went to $3. But anyway, those are short-term stuff. So be careful of Tesla. You got to look at it much, if you look at an hourly picture, it's a different story. So it's different time frames tell you different stories. So if you look at this here, that's a pretty sharp reversal. That's some serious short covering. So where can it go from here? Is all this making sense? Okay. It can come back. It can come out and test the 34. That's 193. Falls in with my previous assumption. It can go up to 95. Or if somebody's trading the bands, somebody's trading the Bollinger Bands, you could be doing 185 to 198. Or you could be looking at this, there's so many different ways to skin the cat, right? So, or you could be looking at a gap here, right there, this gap, there's a minor gap here. and that gap is 189. So you could gap open for tomorrow, for all you know. So different time frames are telling you a different story. And then again, if this green rune starts to curl up like it did here, and this starts to curl down, you're going to see a big move up. So that's it. Okay, the measured move is about 40 bucks down if the pattern continues. Yeah, if you want to, if you really have, you know, what of steel, Rich, yeah, you can certainly do that. And I think on a swing basis, if somebody's not watching their P&L, they could possibly play Tesla down. But I wouldn't bet against Tesla too big. You want to put some money in there and do it, that's fine. So that's my opinion. Okay, if different time frames tell you different stories, how do you know which story to go with? That is my secret. That's not my secret, okay? That's called experience, all right? That's a very, very good question. In fact, that's the question of the day, where somebody asked, if different time frames tell you a different story, how do you know which story to go with? Here's the answer. Ask yourself, look at yourself in the mirror and ask yourself, are you a trader? Are you an investor? If you're an investor, then long-term macro cycles. And let me pull up a picture of the S&P, for example. This is a great chart. You can basically that might come to fruition. I'm a trader. I have an investment book where I put stuff away and I don't even look at it that much. Believe me, I don't even look at it that much, okay? Unless something really fundamentally changes. So the point is that if you're a trader or if you're an investor, this is what we used to say in the old days on Wall Street. Everybody thinks long term and everybody talks long term and acts short term. If you're thinking long term, what do you care if the market's down 300 points in one day? Overall, it's a bull market. It's moving since 2009. It's been going up. So what do you care? So the point is that the way I choose it is I see where I can maximize my profitability. And that's the answer to your question. In what type, which story to go with? I go with the story that says I want to make money over the short term as a trader. If I'm going to make money over the long term, you could buy a huge amount of oil and just leave it in there. What do you think? Oil's going to remain at these frigging low levels for the next 10 years? It's stupid to think that. So it all depends on your time frame, your mentality, the size of how much money you're trading with or investing with. And the way I choose it is what I see will maximize my profits and help maximize my members' profits and all the people who are in the Clueless8 Club. That's the way I choose the direction. Next question. Twitter. Any other? Okay, so let me explain this chart, for example, while I have this chance here and I'm waiting for the next question. Is S&P 500. This chart is telling me on 5 different stories at the same time. All right? And just by glancing at price and volume tells you nothing, because the volatility algos can skew price and volume tremendously. This is not the old days. So this chart, which I drew, and I said that, do you understand this chart, is something to really think about, all right? Right now, we are at a major inflection point here. And I explained this matches in with what I showed before. This is a rising wedge. Rising wedges will break down at some point. Okay, so that point, what I believe in, is going to be somewhere around here, which is around 2100. I believe that on this round, the market will basically move up and test the downtrend line. And if it breaks above the downtrend line, then it's basically going to go up and literally blow our minds up out by going all the way up and making a new high, which would be around 2140. Is that possible? It sure is possible. If you look at the past patterns, that's exactly what happened. So what is so different this time? All right. So if you look at this chart, and again, this takes literally 35 minutes to explain because there's a lot of stuff going on in one go. At this point, these are the points I'm looking at, the 34, the 50. I expect this to enter the uptrend line again. the zone, the rising wedge. And of course, if it falls below, and I've mentioned this many times, if it falls below the 2030 or the 2038 level, we are looking at a quick pullback towards the 61 fib, and a pullback towards here, towards 1980 is also in the cards on the S&P, and again, a 50% retracement of this whole move from the October 15th lows is around 1970. I think that's going to happen, but on the short term, I think it bounces up and tries to retest this line, possibly fails, comes down one step at a time. So this is the simplest way I can look at it. There are pattern symmetries to what's going on. You can look at this, what happened here. You can move this line here, and one second. This kind of shifted a little bit here. Again, because I don't follow traditional technical analysis, a lot of my stuff is difficult to explain. So I do my best in putting my 2 cents across. Doing this right in real time. So you could look at this steep drop here. Wow, I thought we were going to go all the way down here. I still remember that. But no, we turned up and we held this and we did this. So at this point, if you look at a pattern symmetry, and I asked one of my members, he answered it very correctly as I was doing through the coaching session. I was very impressed. What pattern do you see? The pattern that you see is that if this is point A and this is point B, this is point C, this is point D, then it's going to complete the wave at point E right here. That's a 50-point move on the thing. That's roughly and the S&P, and that's roughly a 400-point move or 350 or 400-point move on the Dow. Now, point A. Let's start off here. This is point A. Point B, C, D, E, F, G. Look what happened. So, bottom line is that if this is the first leg down, this would have been the first leg down right here. Okay, we bounced up here. That's similar to this. Then we bounced down here. That's similar to this. Now we bounce up here. That would be similar to the move from here to there. Then we fall again. So if this pattern is going to be repeated, and you can see that, okay, these are complex patterns here. Then you expect it to basically move up to this level. So the bottom line is this rising wedge will eventually get constricted, fall down, and then we'll see what happens after that. But on a short-term basis, I believe that we have created a short-term bottom, and then we're going to have a quick move up. Okay, love the charts and your humor. Anyway, how have you had much success selling options versus buying them? It's a very good question. That's a weakness on my part. I need to basically sell more options instead of just buying them. That's a straight out answer. I'm not an option specialist, mind you, and I think I'm a good macro forecaster and a trend directional call, that type of guy. But when it comes to actually managing complex option strategies, I'm not. I don't think I'm that good. That's why my trades are faster, and I tend to, what can I say? If you do need to get a very solid idea on option spreads and strategies and selling calls or selling puts and all that stuff, I would highly recommend that you work with Saim Shogun, and he would basically walk you through a lot of those strategies. I think that would be a great answer to that question. Okay, like they say, you can't be jack of all trades and master of none, but that's a deficiency on my side that I need to really work with and build. But I am never going to be the one who's going to basically walk you through complex option strategies. So, no. Okay. If the dollar remains strong, if different time frames, I answered that. If the dollar remains strong, it might stay down like the 90s. If the dollar remains strong, it might stay down like the 90s. Oh, are you talking about, oh, oil stays down? Yeah, I think oil stays down. I don't think oil is going to 100, but I think oil trades within a band of 50 to 70 bucks. Yes, so that's a straight out answer. I don't think, oil is not just a function of the dollar, mind you, okay? For all you know, in 5 years' time, you could be trading oil in Chinese yuan. So even though it's a petrodollar, is the currency that oil trades in, things are changing. The Chinese Development Bank that just is recruiting members. A lot of our allies, Canada and Australia and all these countries are signing up right, left, and center. The Chinese are exerting their dominance in the financial currency markets and want to take a big pivotal role in how these big commodities are priced. So the dollars, even though it's king dollar, and again, it doesn't necessarily reduce American power, but the Chinese are getting in the game. So don't be surprised if it becomes a free-floating reserve currency. I don't think it's ever going to trump the dollar in our lifetime, in my opinion. You could very well see a different thing. So it's a supply-demand issue. It's not just a currency issue in the case of oil. I don't think oil's going back to 100 or so. My point is that oil could move up to 70, and you get a real supply shock in the system. You think these stockpiles that we have are not going to run out at some point? You cut enough rigs, we're going to be pumping less oil out there. So there's a lot, there's different parts of the story. So let's not get too bearish on it. So, end of story. Okay. Any thoughts of the recent IBB pullback, continue, consolidate, or reversal? I have explained this clearly that that IBB, and I'm going to pull this up here, is in for a short-term bounce, and I believe that depending on what stocks you're looking at, not just the overall picture, it is a great sector to be in. So here's my answer, and this question comes from Mr. Bird. So this chart is absolutely fantastic. This is the daily chart here, and I want everyone to really look at this here, okay? Because this is the money chart. So this stock came down. It created a reversal hammer and a hollow candle. I pointed it out right off the bat. All right, the ICPTs and the word biotech is going higher for now. Okay, it depends on the stocks you're looking at. But here, this hollow candle right off the 50. It can't get any better. Look what happens every time it comes to the 50. It slipped below that, touched it, and this one could slip a little bit more, for all I know. But it's now up here. It's attacking the 5-day moving average. Let me put in my 34s in there. Okay, it's above the 34, very positive. And again, it could very well, if somebody wants to look at retrace levels, it needs to break out of this box. And if somebody wants to know short-term what's going to happen, let me show this. You got this big capitulation bars. Great. Washed out the froth. So now you're in for a bounce. We are starting to see the OBV climb up. It's still on a sell mode if you want to look at it that way, but this is certainly bullish. If you want to look at a short-term basis what's going on, one second. Let me put up the Bollinger up here. Okay, the Bollinger is up here with acceleration. So at this point, if it violates and goes higher over this 5-day moving average, is pointing down, you're going to come back and retest the highs again. Remember, this was a blow-off top. There's no question about it. However, for the first time, I've seen a blow-off top that's actually green. So it's telling you something here. This run ain't over. These companies are in the next generation of coming up with things. It's a paradigm shift. So again, I'm not a big biotech player. I play certain of those stocks. I think they have huge potential. But honestly, if it breaks out of this box here, it's going to go back and retest at least this level. Whether it retests the blow-off top, I have no idea. But retesting 365 on the IBB is very much in the cards. If it breaks below the downtrend line here, then we're talking coming down and retesting. First level retest would be the breakout level. This one. Can everyone see this? Okay, good. So 330, if it breaks below 330, we could be looking at the lower levels here. I always look at breakout levels. This cup and handle tap. This was a triple top breakout right there. Putting arrows. I need to get better drawing tools for these webinars, so I'll do that next time. So if you notice, this acted as a major resistance. It broke out here, came down, tested. So this level is a powerful level to keep an eye on, and that's around, it's possible, 318, 320, this one first. So again, this looks like it wants to go. At least test. I don't know if it's going to go back and test the all-time highs. But let's take a look at the, now I'm going to show you something here if you want to know what it's going to do short term. And I use the fibs on this picture here. So on a short-term basis, moved up, creating a little flag. On a hourly chart, it looks like it wants to go and retest the 50. Let's run 355. Will it complete this pattern and fill this gap? I don't know. Can it happen? It sure can. The momentum hasn't completely died out. And trust me when I tell you that. So at this point, if somebody's bullish, they're looking at this and saying, you know what? We're going to at least come up here. We're going to take this out. We're going to complete this pattern, and then we're going to see what happens. So that's my opinion on it. Okay. Before trading in size, should we identify our own risk tolerance and profit profile? That seems like a, that seems like a rhetorical question. I mean, it's the answer lies right there. If you don't look at your own size and your risk profile, what are you doing? And everyone's risk profile is different. I believe in risk. I've never shied away from it. I think this country was built in risk. I think the whole evolution of human beings was risk. They didn't go sit around the cave. They went around and killed the mammoths, right? So we're built on risk. Now you quantify your risk. If you are a trader, you got to play with risk. You cannot, it's an oxymoron by saying I'm a safe trader or trading is a safe business. Trading is a risk business. Risk is okay, as long as you can manage it. Now, managing risk takes time, patience, energy, losses, a nice, a nice trading capital, all kinds of stuff. Mental, what should I say? Mental sanity or a reserve, so you have brains left. I have 2 brain cells left still after all these years. Okay, and I'm still using them. So, all kidding aside, absolutely. Now, can you say 1 + 1 = 2, so if it goes this way, it's going to go that way? No, it used to be like that. You could really quantify risk to a certain degree. Okay, let's say 10 years ago. Now, because the advent of high-frequency trading and algo programs, risk is being shifted every single minute. And I still stand by the fact, and I will say it, that this market demands risk. It demands us to be on our toes. It demands us to cost average down and sell into those spikes. So you got to embrace it. Embrace volatility. I said that end of last year. I'm sticking with it. The theme of this year is volatility and going forward. And if you don't embrace volatility, tame the beast, trade within that. Don't trade. So that's, and if your profile is a safe trader, don't buy my swing charts. I forecasted the markets tremendously well. Okay, buy some of this and sit on it. Don't look at your P&L every day. If you want the 300-400% type of returns, you've got to take risk. Don't look for some sort of magical certainty that, oh yeah, this stock, this is definitely going to, going to be the case. In my opinion, you have to embrace risk. Risk is okay. Risk makes us human, makes us strong. So that's it. That's my opinion. All right. Is this a classic blow-off climactic top? No. Options are wicked. Size is everything. Absolutely. Options are wicked. That's all. What can I say? Key point is don't put all your eggs in one basket. Always have cash on the side. I've been saying this all the way through. So you can capitalize on, not everything goes down. It's not a homogeneous market. It's not a homogeneous market. You're not going to just fall apart. Everything falls apart. There's very few days that everything falls at the same time. On the day that the market had the worst drop, what was it, Wednesday? Oil, my UWTI and the EOG and all that stuff was going through the roof. So you got to know what you're doing. Not doing. You got to have pieces in different positions. You can't be just putting all your eggs in one basket and saying that's it. But without risk, there are no rewards. Just get that through your head. All right, let's move on. Let's take a look at chart of the VIX. All right, this is something that I monitor like a hawk, like a clueless hawk, and trying to read this is this and the RVX, right? Now this switches around literally like an algo chart, so it moves around fast, jagged edges, and trying to read it can be a little bit tricky. If I showed you this chart, it's the simplest way somebody taught me a long time ago. If I showed you this chart, would you buy it? If you say yes, in that case, stay short the market, and if you say no, then play the market for some bounces. Simple as that. So there's different ways to interpret this. There's no simple answer here. My take is everything is very short term here, obviously. Okay, and it's not my take. That's exactly what the market's telling us. So we have the VIX here can very easily move up. You know, again, this channel is defined. It was, you know, when we look at intraday moves and this type of sharp spikes, that means the market's pulling back, right? Simple. VIX and the RVX are volatility fear indexes. When they go high, they're inversely correlated to the indices. So when the VIX or the RVX are going higher, the markets are going lower. So at this point, I wouldn't be surprised for the VIX to pull back, test the 50 and the 34 towards the 14 level, make a bounce from here. Fails that, it's going to come down and retest and create a possible triple bottom that breaks and comes down to 11. If VIX goes to 11, this market is basically taking out new highs. Okay. However, looking at the this, like I said, it's fluid. So you got to look at a lot of different components moving at the same time. What do you call? Here we have, yeah, exactly, Todd, that's what I was going to say. So here we have a crossover 30 over the 50. Now keep in mind, this is an hourly chart, okay? So this means that the VIX could very well move up here. There was a very well move up here, and then if VIX breaks over 17, we're in trouble. At that point, it's going to go towards 19, and then move higher, and then move up. You know, if it breaks this downtrend line, then obviously we're in for a sharp pullback. In my opinion, the VIX possibly has a shot to go towards 19 on any type of pullback, which could happen prior to tax day. So we have to be extremely careful. Just looking at the 34 and the 50 won't tell you the full story. There is a crossover here. However, it's a weak crossover because it could very well come down. If the VIX pulls back again down and tests the 50, that means the market could easily be 100 points. I showed that earlier. This all kind of matches. You know, we're good for another 20 points on the S&P. So that's roughly about 160 Dow points. That could happen. Now, looking at the vortex, it's obviously pointing down. And then, I'm sorry, looking at the vortex, it looks like the VIX is going to possibly move up a little bit more. And let's look at one other thing here. It looks like it also could be in a slight bottoming process with it. Look at this, and it's starting to come down a little bit. What if this turns, the green line turns up a bit? Then you start to see the VIX pulling back. So there's a lot of moving. Pieces in this here. Let's take a look at the daily. Maybe that's going to give us a better picture of what's going on. Looking at the daily, we have, as you can clearly see here, the VIX is really moving. It got overbought. It's starting to pull back a little bit here. So this is the line we got to watch. If we cross over 17 hard, then we're going to move up towards, one second, there. So this is the critical level here. We don't, if for bulls, we don't want it to move up over 1850, call it, 1850 or so, because at that point, this range comes into play. And at that point, you don't want to be long the market. Can you be long individual stocks? Absolutely. And it could happen for many different reasons. So it's a mixed chart here, but this is the band that you got to keep an eye on. You got to keep an eye on 1730. You got to keep an eye on 18, let's say, or 1840. You got to keep an eye on this. On a short-term basis, we'll see what happens. So it's still a tough read. It's not a clean-cut chart. However, if it follows this pattern, that means the market's in for a pullback. I think we still get to about 25, and I think that happens by, who knows, it could happen very well by the end of April, or even before that. We'll see. Okay, let's see here. Too much political risk for 11 volume, maybe 14 or mid-13s. I agree with you. I agree. I don't think it's going to be, 11 is asking a little bit too much for the VIX, exactly, coming down here. But a retest of 11, mind you, this is the way, contrarian thinking, game theory stuff. A retest of 11 would be a blow-off top for the market. And at that point, you could see one of those huge moves up. So it could very well happen. All right, because it is look at that. It's a lower high every single time. So if it bounces up here and then fails, it's possible that that it gets down here. So this is the band. This is the 11 band that which could set up for a nice fat drop in the market. When everyone gets a little bit too excited and a little bit too euphoric, as you know, that's the time that I just I kind of shy away from being on the long side. Okay. What else? So I think okay. All right. So I think we covered quite a bit. I hope some of the newer people who are here got a little slice of what I do here. I'm looking forward to a very exciting, engaging, and a highly volatile week. Janet Yellen's speech on Friday is setting the stage for a short-term bounce, in my opinion. She didn't say anything new. I think it was somewhat positive what she said and the way they're doing. I'm looking at a lot of the internals, which are telling me that we got oversold too fast, too quick, took the froth away. So now let's play the bounce, make some money, do what we need to do. Now, all I got to say is, for a lot of the newer people who are listening to this, or you go out there and tell your friends and colleagues, come try out the promotions that we have, work with us, see how you like it. We're growing very nicely. Love to have a lot more people in the room. We have some very smart people. I'd like to remind everyone, we have a bunch of specialized chat rooms. We have the biotech booth. We have Ragar's picks. Fantastic ideas, many names that I don't even know and follow, and that they're in there and they do extremely well. Then we have the members trading room, and of course we have all the content delivery, real-time news that's breaking on the Twitter private feed, as well as the trading chat room, trading news chat room where we post a significant amount of company info as relevant, and of course the public chat room where everyone shares their discourse and their ideas and thoughts. So we have a lot of conduits here in play. The extra services, which I think are extremely important, highly recommend that you guys, go ahead and try and try it, is advanced coaching sessions, and those things are extremely valuable for people who really want to understand how this game works. It's a one-to-one screen sharing. You get to see the whole thing. I'm going to be introducing a program down the road in the not-too-distant future where you can actually screen share during real time, so you can see all the different things I'm looking at, and why a lot of these forecasts are very precise, even on a very short term, if not on a longer term basis. So all those are available for everyone. We're growing. We're going to be, like I said, we're less than a year old. We're going to be a year old on April 15th. I'm working with a fantastic tech admin of mine, as you know, Saim Shogun, and who is also very keen on helping, just the way I am, and putting in new innovations and products that's going to help us. So saying all that, let's say, are you leaning to a long-term feed? Not quite understanding what the question is. Are you leaning to a long-term feed? I'm sorry that I couldn't quite understand what that means. Long-term trading. No, I'm not leaning towards long-term trading per se, because long-term trading itself is basically long-term investments. So no trader is really long-term. Let's face facts, okay? My long-term portfolio is going to be adjusted this week. And there's going to be a lot more ideas in there. And again, I put in enough time and energy out there, which I think would find helpful in my long-term forecasts on the markets, as well as my short-term forecast. But the long-term portfolio is a good conduit and a window to stocks that you might be looking at buying at different intervals. Remember, I scale in, I don't buy in at one go. Same thing with trading. So those are companies which I believe will prosper going forward. So that would be the long-term window that you'd be looking at. As in swing trading, for traders, that itself is intermediate swing trading, and holding things for a couple of weeks or so. That's, that's considered, that would be the time frame I'm looking at. So yes, in answer to your question, more trade picks for more than 2 weeks. Absolutely, the long-term portfolio that's out there is not for 2 weeks. That's for 2 months. I mean, sorry, not 2 months, for 2 years, or at least 12 months. At least 6 months, 12 months, 2 years, and going forward. So the long-term portfolio is the answer to your question you keep on asking, is that those are the trade picks or the investments that you need to hold for a much longer period of time, despite the volatility and the price fluctuations and such. Okay, so thank you, and I appreciate everyone's full support. And like I said, we'll be engaging tomorrow. Very important. I want every single person to make sure that whenever they get a chance to review my video cast, very important to do that, because that offers a window into the way I think, into what I'm expecting for the trading days coming forward. And it's very important that you look at the sequence of events as I put through. It's like a soap opera, as I like to tell my 16-year-old. When you look at the markets, it's nothing but a dramatic soap opera of financial and human psychology at play. So make sure that you listen to the video cast, read my short commentaries that I put out there, so you have a better understanding and feel, and you can profit from that, and you can act on that on the next trading day and the following week. So very important for everyone to to follow the content that's being delivered and review those video casts that I put out there. So saying all that, I'm hungry too. Josh, you're fantastic. Bring in a lot more people to join us, and that's it for tonight. All right, and thank you so much. And very important that the free trial for all of this free trial are available for all of the standard memberships. So keep in mind that anyone wants to try us out. Like I said, we want to obviously spread the word, and a good word from a member and a referral from somebody is the biggest compliment and the biggest draw. So make sure that you use the free trial to see what we do, and if you like it, stay with us, and if not, move on. All right? So that should be good. Thank you, and good night.